Good morning, friends. Welcome to the YouTube channel Advocate Amit Kumar Gupta. In my series on the income tax cases, the case which I am going to discuss today is Income Tax Officer versus Ramesh Chand. This case has been reported in 97 ITAT Tribunal at page number 421 and the matter has been decided by Delhi ITAT. The date of the judgment is 14th October 2021. Friends, the main logic of discussing this case in my series on the income tax cases is that there was an issue which has been decided in this case whether addition can be made on the basis of the statement of the assessee given to the third parties. So the question arises, when the assessee gives the statement to the third parties, what can be the possible instances of this thing? So one of the very common instance of this case is when the assessee gives the stock statements to the banks for availing the credit facilities. So in this particular case, when the assessment was going on, the assessing officer issued notice to the bank under section 133 subsection 6 for obtaining the figure of the stock. So when the bank replied to this notice, the assessing officer came to know that the stock value which has been mentioned to the bank is more than the value which has been given by the assessee in the stock statements filed with the assessing officer. So the assessing officer made an addition of the difference in the value of the stock. The second issue on which the addition was done was low drawings by the assessee. The allegation of the assessing officer was that the drawings are very less, so the assessee have done his personal expenditure out of his undisclosed income. So some addition was done on the basis of the low drawings of the assessee. For this point, the assessee has to say that I live in joint family, I have agriculture income also, I have 2 sons and they are also earning. So our household expenses are not very much. But the assessing officer was not impressed with the version of the assessee, so made the additions. But the CIT appeal gave relief on the 2 matters to the assessee. The point of the CIT appeal was that the stock statement which has been given to the banks is not a proof that the assessee has earned some income. It is only because of some adjustments between the bank and the assessee, whether it is legal or not, that is a different point. But only by giving inflated values to the bank of the stock figure, you cannot make the addition to the income of the assessee. And the CIT appeal also deleted the addition of the low drawings also by accepting the version of the assessee, because there was evidence on the record about the income of the sons of the assessee and about the agriculture income. But department was not happy with the CIT appeal order, so department appealed to the ITAT. ITAT also brought a very important point on this case, that additions cannot be made on the basis of the statement given by the assessee to the third parties. You have to go by the evidence. If the evidence suggests that there is escapement of income, there is a understatement of income by the assessee, then you can make the addition, but only because of the some statements you cannot make the addition. And the ITAT also upheld the order of the CIT appeal regarding the deletion of the additions on the basis of low drawings by saying that the assessee has agriculture income and assessee has given very plausible evidence for the income of his 2 sons, so the additions cannot be made by keeping all the facts and circumstances of the case and by seeing the living standard of the assessee. Friends, this case is very important because in our normal practice we see that the additions are made on the basis of the stock statements and the additions are made on the basis of the low drawings in the case of the assessees when the assessee is an individual. So this case is a milestone in resolving those issues. Friends, at the end of this video, I want to say that if you want a copy of the judgment, then there is a link and you can click on the link, and by subscribing to the ITR you can get that full judgment. But before relying on the video, you should go through the full judgment. Only then you can come to know about the whole facts, because in my 5-minute video it is next to impossible that we can explain you all the facts, but I try my level best to give the ratio of the case. At the end of this video, I am just repeating the name of the case. The name of the case is Income Tax Officer versus Ramesh. Thank you, friends.